Take a look at this chart. This is the past month and a half of Amazon. Does it look range bound to you? Feel like putting on an iron condor today? If so, join me in your trading platform of choice. Hi everybody, Neil here again. It is May 29th, 2020. It's Friday. It is the final day of our cherry bomb trades for this week. And as I mentioned in that brief little intro, we're going to be putting on an Amazon trade today. And we can see that this is the past month and a half. It looks pretty sideways trading. Let's back out here to see the year here. And we can see the Corona bump that Amazon got. Right, and then it seems to be in this range that we were looking at before. So, with that said, let's head on over to the Analyze tab and make ourselves a nice simulated trade, because that's what we do here, right? If you're new to this channel, this is what we do. We put on cherry bomb trades. The link to get on the email blast for these cherry bomb trades is in the description below. Head on over. Cherry bombs come from Tasty Trade. They come out in an email at the wee hours of the morning, and then I put these on camera so that you guys can have a sort of video to watch of how to put these on and a little bit of an analysis. All right, with that said, let's continue on to build this trade. So I'm pulling up over here. We are going to be in the July 2nd weeklies with 34 days left to expiration. And we're going to be building out an iron condor. So it appears as though something is going a little wonky here with my data. So let's see if we can build this anyway. All right, okay, that's better. Whew. All right, now we're looking good here. So we're looking at putting on an iron condor that's going to be $10 wide. So you could look at it this way. $10 wide obviously is a pretty wide spread. If you're looking to trade small and trade often, which is sort of the Tasty Trade way, which is what we try to practice here, put those theories to the test, then this might be a little too big for you depending on your account size. Of course, if you're doing like we are doing here in simulated trading, then it's probably not too big of a size, right? Another way to look at this is wide spreads like this are what they call synthetic naked trades, right? So it's up to you. We'll take a look at the risk. We'll always understand what we could lose and what we could make and what our probabilities are before we put on any trade, right? Okay, so we are looking at a put that is the 2200, which is, where are you? Back here. There we are. So I'm going to right click on this put here. Anywhere, it does not matter where, with the bid or the ask. Choose Analyze Sell Trade. Scooch on over to the Iron Condor. It's going to build me an Iron Condor, which is nice and handy dandy, right? And I want it to be the 2200 put and the 2210. Give me a second here. Short the 2580 call. $25.80 call, the $25.90 call. Now I think I'm seeing a little bit of a typo here, and I could be wrong, but it looks like in the email that this is a little backwards, right? So we want 2210 and 2200. Assuming those are the numbers that we're looking for, because it doesn't make sense in their email. Good thing we looked at this, right? Let's just put this into the risk profile and see, yeah, that's probably what they were going for. So I think he swapped the long and the short in the email for the put side. I mean, it could be this. It could be that we were supposed to do the 2200 and the 2190. But that looks more skewed and not centered. So let's go back to the 2210 and the 2200. And let's call that, I think that's what they were going for. All right. The expiration here is July 2nd. So let's set this calendar over here to July 2nd. And now we can see our expected move here. Let's set our break evens. Set slices to break even at expiration here. We're looking at a 58.8 probability of profit. And then I like to set these slices, as I showed in one of my how-to videos, to the chart. And we can see here that this is the range in which we're looking Amazon to spend the next 34 days. And if we do so, what can we expect to collect? If it stays in that range, we're looking to collect $292, which is roughly, it's close to a third of the width, right? It would be better if it were $333. All right. Of course, these numbers are pre-market too. So, you know, with this kind of a trade, you could type that in and see if it fills. You know, let's set this to $333. Right. Now it'll try to fill at that for us. And we'll see what happens. If you have the opportunity to watch this and see what happens on open, you can see where the mark is, see if you're likely to get filled at that price, and go for it, right? So we see the probabilities are there. We've set it to the chart. So let's review our max profit and max loss. So if we do get filled at that price, right, we're looking at a max profit of $333, 667 possible loss, right? Now that's a question mark whether or not we're going to get that, but we will keep an eye on it. I'm going to hit send on this one to route this trade to my working orders. You see some wonky stuff going on here. I was responding to a user's question, a viewer's question on my video on how to use the account statement feature here. So that's why this is all weird. But that's another point. Hey, if you have questions, please leave them. I like to respond to all my comments. So, you know, please do so. If this is the kind of thing you like, please hit that like button, subscribe, and ring the bell so you'll be notified when these videos come out. But you can see here's my working order here, and this is the portfolio as we have it right now. Okay, so thank you so much for tuning in, and I look forward to seeing you next week for our cherry bomb trades. Happy trading, everybody.